think it's less to do with about BRICS and more to do with the fact that Israel wants to reign supreme in the region and has the ability to do so. If we look at the current conflagration between Israel and Iran, we've seen that China and Russia did not really come to Iran's aid. They've barely intervened in this conflict. I think they're watching from afar what's going to happen. So I do not foresee this as a concern regarding of China and Russia in terms of the future of BRICS, but more about the ongoing and future dynamics in the Middle East.
Monaco 64, home of alternative economics and contrarian views. Today, I have a new guest. His name is Fadi Hakura. He's owner of a Substack called thothtalk.com. And Fadi, it's great to have you on. We are good friends, of course. And yeah, tell us a little more about your Substack page and also your background.
So thank you very much. It's lovely to be with you. Really, basically, I created a Substack page because I saw a lot of commentary on markets, macroeconomy, that I felt were inaccurate, uh, were not properly understood by the average investor. So I wrote this Substack to try to break down some of these inaccuracies, to try to explain some of the uh, difficult jargon, and to provide the reader with tools to understand what's going on in the markets, in the macroeconomy, and the broader global politics uh, uh, more easily. My background, I graduate in economics, became a solicitor here in London, worked with the European Commission and the World Bank in Brussels. Then I joined Chatham House, which is the Royal Institute of International Affairs, as their Turkey specialist, covering all issues from economy, politics, foreign policy, and the Middle East.
Yeah, and now you're independent, right? You left
Yes.
Chatham House, and could you go over a little bit what thoth means? I mean, I wasn't familiar too much with Egyptian history, so maybe you could explain to us the title of your blog, what it means, and why you named it like that.
Thoth really is the ancient Egyptian god of wisdom and writing. It's Ancient Egypt was one of the greatest ancient civilizations we know today, with incredible achievements in architecture, even in mathematics, science. At least they were. And I have a great fascination with ancient Egypt, so it was natural for me to choose the ancient Egyptian god of wisdom and writing as the name of the Substack.
So yeah, if the viewers are interested, is thothtalk.com. And so let's get started. And I see you covered geopolitics, economics. So let's start with geopolitics, even though economics is very important, only because of what's going on in the last almost week now between Israel and Iran. I want to have your take on that, seeing that you covered that part of the world, kind of like Turkey. So yeah, can you tell us what you think is going on there and what's going to be the consequence of the current conflict?
What is quite dramatic about the Iran-Israel conflagration is that all the assumptions and narrative that was peddled previously that any attack on Iran's nuclear infrastructure will be extremely difficult is turning out to be untrue. So far, Israel's has damaged quite severely a number of Iran's nuclear entities, such as Isfahan, where they processed uranium, and also Natanz, which was another major part of the nuclear infrastructure in Iran, was heavily damaged. Now it looks like the United States may enter the fray to destroy the third leg of Iran's nuclear infrastructure, namely a plant called in Fordow, which is dug deeply, was established deeply in the mountain, and only the United States has the bunker buster bombs to achieve its complete destruction. What we see is that it has barely had any impact on markets. We've not seen oil went up, around maybe 10%. Gold barely moved. So what this all indicates is that all this narrative that we saw being peddled in the market by commentators, etc., that oil would spike to $100 a barrel or higher in the event of a Iran-Israel war has turned out to be untrue.
I mean, there was talk oil would go to 150 or even more, but isn't it still possible that we could see that if things get worse, if the U.S. Joins Israel? Not that I don't think the U.S. is already helping Israel. Don't you think that could be Iran's trump card, so to speak? If things get really bad, they could block the Strait of Hormuz, and that could lead to a lot higher oil prices.
It's possible. However, if I had to speculate, I think it's unlikely, simply because Israel has severely damaged Iran's Iran's missile infrastructure. Israel appears very clearly it has deeply penetrated Iran's intelligence and military institutions. It also, Trump made the point that he could easily eliminate the supreme leader, Ayatollah Ali Khamenei, but said that he will not do so at present. Therefore, clearly there's a sense of confidence among Israel and United States, which suggests to me that if the United States were to enter the fray, I do not think that we will see a greater escalation or at least the ability of Iran to escalate the conflict.
Do you think this conflict is happening now because of what we've been told, that Iran has a nuclear weapon, that it could use it right away? Or do you think that's an excuse for chipping away at BRICS? Because I think the US is concerned about BRICS because it's gone from 5 countries to I don't know how many there are now, and there's a lot of other countries that want to join, and it could definitely be a challenge to the dollar. So it's difficult to go against all of the BRICS. So you go one by one. Do you think that's what this is about?
I think it's less to do with about BRICS and more to do with the fact that Israel wants to reign supreme in the region and has the ability to do so. If we look at the current conflagration between Israel and Iran, we've seen that China and Russia did not really come to Iran's aid. They've barely intervened in this conflict. I think they're watching from afar what's going to happen. So I do not foresee this as a concern regarding of China and Russia in terms of the future of BRICS, but more about the ongoing and future dynamics in the Middle East.
There are people who talk about, yeah, you mentioned, is it Greater Israel? And isn't it called Haaretz? But does that mean that Israel wants to control the whole of the Middle East, Iran included? I mean, President Trump came out and told Iran to surrender, but I've seen that the Ayatollah has come out and said that they will never surrender.
I think Israel wants to ensure that there is no a significant rival to its interests in the Middle East. Iran was one of the few countries in the region that attempted to openly challenge Israel over the last 30 or 40 years, such as through its proxies in Lebanon or in Iraq and in Yemen, as well as its alliance with the former Syrian leader uh, Bashar al-Assad. So Israel wants to ensure that there is no major threat to its interests in the region. Iran was one such threat. Naturally, the United States and is both the United States and Israel wish to now are have see a fantastic opportunity to get rid of that threat permanently.
So before we move on to another topic, do you think this is going to end quickly and that Israel will end up being on top of things, or do you think Iran is going to make it really hard and we could be on the cusp of a major, well, some people are saying that we could have World War III because of this.
I suspect that given the events over the last few days, that this conflict will remain limited. United States and Israel will be able to inflict heavy damage to Iran's nuclear infrastructure, but more broadly, uh, severe damage to Iran's military, security, intelligence, institutions, and networks, which will mean, and in combination with the fact that the all the main proxies that Iran fostered in the last 3 or 4 decades, primarily in Lebanon and in Yemen, uh, have been greatly diminished, and Assad is no longer in power in Syria, means that I think that Israel and the United States will achieve the ultimate objective with without enlarging the conflict across the region.
Okay. All right. Let's move on to something that you recently wrote on your Substack. I'm going to share it first and then we can talk about it. Uh, you say, forget the analysts. No, this is not the one. Sorry. Uh, is this the latest one? No.
The latest, the top one.
Oh yeah, here, sorry. Don't buy the doom. Druckenmiller, Dalio, Gundlach, and Wall Street are wrong on a U.S. debt crisis. So, I mean, I might be of a different opinion, but I like to listen to uh, contrarian things. I consider myself a contrarian. And I guess if a lot of these big wigs on Wall Street are saying something, saying the opposite might be contrarian. So, yeah, give us your view on this topic then, Fadi.
I don't. For me, there's no doubt that the U.S. debt is out of control, and the U.S. has been suffering 6.7% GDP deficits for the last few years, as if the United States is in a state of war. These are wartime type of deficits, last seen during World War II. But I don't think that the U.S. will necessarily face an immediate or imminent debt crisis. This is where I part company with Gundlach, Dalio, and Druckenmiller. For me, the debt issue in America has a more sinister outcome, namely that it's shackling economic growth in the US. It's driving down per capita incomes, and I suspect that it is causing incremental damage to the US economy to such an extent that I think it's heading towards either a stagnation or more likely a stagflation with moderately high inflation, uh, which will not garner mass public discontent, but at the same time high enough to erode the public debt, and with sluggish economic growth. And this, to me, is much more pernicious for the U.S. economy than if we saw a crisis, because crisis pushes governments to act. But a stagflation, or let's say a moderate stagflation lasting decades, is unlikely to spur any government action, at least in the foreseeable future.
Yeah, you go back to the post-World War II period where the US had huge debt to GDP because they fought in World War II, and how they were able to bring debt to GDP down through, I guess this is the policy of financial repression. You keep interest rates below the rate of inflation, and you do it in a way that very few people notice, and uh, and then the debt goes down not through economic growth, but through the debasement of the currency, eating away at the debt. And I get that, they could do that again. The only problem I have with that, and I'm being a little bit of a devil's advocate here, so I want to see what you say in response, is that during World War II, well, after World War II, the US, yes, had a lot of debt, the government, but the general individual debt and corporate debt, I don't think was as high as now. The other thing is the US was the only economy that was really functioning, that hadn't been destroyed or disrupted by the war. They didn't have any supply chain problems. It was still a manufacturing powerhouse. It had 2/3 of the world's gold reserves. So it was much easier to implement that because people were probably the most prosperous at the time in the 50s and 60s. But nowadays it's also different, Fadi. Like yes, the debt is similar, public debt is similar to back in World War II, but also the individuals, corporations, they have a huge amount of debt. The economy the manufacturing has been hollowed out. And yeah, it's kind of different. And what doesn't it concern you that they might try this to like drag it along and stagnate, but people might rise up. They might not be willing to face this financial repression.
I think that the US this time, if I had to hazard a guess, will do it more subtly and less extreme than what they implemented after World War II. So you will not in any inflation, at least if we trust, assuming the government numbers are accurate, and there's debate on that, but we'll take the government numbers. They'll keep it. My hunch is maybe at around 4% level. So that's just about maybe acceptable by the broad public without generating any mass discontent. But keep interest rates also more subtly, push the banks, for example, using regulatory changes, push the banks to absorb some of these losses by, for example, government bonds set at interest rates below the inflation rate, push pension funds and other institutions, and try to exempt as much as possible frontline, if you like, the retail investors, or the average public who has bank accounts, who has savings and current accounts or checking accounts in the banks. I think they will do it more subtly this time, but over a much longer period of time to keep discontent, to try to minimize the discontent, and that can continue. Look at Japan. Japan's economy imploded in 1989, 1990. The transition in Japan has been exceptionally slow. It's been really suffering near zero economic growth rates for the last since the late 80s, with minimal public upheaval. And I suspect that's the formula that the United States and many European countries will follow.
Interesting you mentioned Japan because despite them doing that, their debt to GDP is still really high. Do you see that happening to the US? Even though in your piece there that you wrote, you think it's going to chip away at the nominal debt to GDP because in Japan it's like almost 250%.
I mean, Japan tried fiscal policy. It tried quantitative easing, which is basically money printing by the central bank to boost its economy, but it never worked. I think similarly in the US, if we learn from that, that the fiscal deficits will not stimulate the economy as they may have done in the past, and quantitative easing, I think the marginal impacts of if we take a main concept economics, there's diminishing marginal returns, in other words, from fiscal deficits and debt, as well as money printing. So that's why I see Japan and the US following a similar path. Uh, Maybe Japan will ultimately follow the United States and push up inflation a bit more to bring down its debt. But what it does show is that both countries are, maybe Japan more so than the US, are stuck in some form of stagnation. The US economy is heading there, not to I do not foresee a massive recession like 2007, 2008, or the dot-com bust of 2001, but a much more painful kind of stagnation or multi-decade stagflationary trend in the years to come.
Yeah, so just gradual, yeah, moribund economy for decades. I mean, a crisis would be probably much better because it clean everything up. I think your view is, in my opinion, is even worse in terms of the economic picture. It's worse than a crash and collapse. Uh, I'm not saying your view is bad. It's just that it's not that good either. But before we look at where you would be putting your money to work in such an environment. Just want to ask you the question. There are a lot of people out there who say that the powers that be do want to bring things down. They do want to see a collapse of the system of the debt so that they can bring in central bank digital currency to put people in a digital prison. Do you see that happening? Or do you think they're too arrogant and they won't be able to gain control of the world? I mean, over the millennia, many people have tried to rule the world, but they never succeeded.
I think that as long as Donald Trump is still president in the United States, the likelihood of a digital currency is, at least in the short term, unlikely. I know that the European Central Bank has expressed an eagerness to bring in a digital currency. I think possibly also in the UK. United Kingdom has similar aspirations. Uh, the purpose of such a currency is not really to facilitate transactions, because the convenience, the additional convenience for the average consumer will be minimal, but rather I think it will make it easier for the central planners, for the authorities to monitor what activities the average citizenry are conducting. It makes it much easier. And we've seen some these kind of admissions come out of some of the Fed presidents who were appointed by former President Biden. That the central bank, the digital currency's main purpose will make it easier to monitor what the average citizen is doing and the way they're spending their money.
Yeah. Okay. What about, so let's, on your article here, you you've got a part here, listen to gold. So just want to take your view on that. And that's, of course, related to where you would put your money in the maybe stagnation, or the great stagnation, as you call it, or the great stagflation.
I think gold. If you look at gold, if we can go back in time, the gold price started to really increase in 2016 gently, and it was primarily because central banks, such as the People's Bank of China, the Central Bank of Russia, and other banks in Asia, began to slowly accumulate gold, shift away from building their dollar reserves to building their gold reserves. And when central banks buy an asset like gold, they do so with a very long-term perspective, not like the average investor was probably trying to make a quick buck, but really with a very long-term perspective, looking at the geopolitical trends, global economic trends, and therefore, gold has, to me, is one of the best assets one can be for the next, not just in the next few years. I would hazard to guess at least for the next decade, if not longer, given the economic trajectory we are seeing in both Europe, UK, United States, even China, Japan, where we're seeing pretty much growth rates really flatline at very low levels, with potential with generated inflation to control the rising public debt levels. Even frugal Germany has abandoned its previous opposition to public debt. It recently diluted its debt brake in its constitution, and is now going to be on a debt and spending spree, putting money, I think 1.5 trillion really euros to borrow and spend in the defense and infrastructure sectors to try to stimulate the economy, which may work in the very short term. We're seeing just everywhere that Europe, United States, Canada, Australia, you name it, are all have been too dependent on debt to stimulate their economies for the last 40 years. And I think that game is coming to an end. Gold is one of the best assets to be in. So is gold's poor cousin. Silver is another one. I think more broadly, commodities should be doing well, such as, for example, copper, because we have now major structural shortages in copper. Uranium is another asset that did spectacularly well in the 2020, from 2020 to 2022 period, but it's expected to do well in the next period because again, there's been a boom there's now a boom in building nuclear power plants, embraced both by the environmental lobby and by the security hawks in the United States and in Europe and China and Japan and so forth. And then we have a structural shortage in uranium. And then if you wanted to speculate a bit more, it appears that platinum and palladium are interesting plays, but these are more with a 5-year horizon, given that platinum and palladium are a critical ingredient to the catalytic converter in the automobile. And I'm one of those that don't believe that the fossil fuel powered car will disappear anytime soon. Demand for fossil fuels is and oil particularly is still growing, is still at 80%. If you look at the global energy mix, has barely come down in the last 20 or 30 years, despite the massive investments in green energy. So commodities now is probably an interesting area to be in. First, the precious metals, gold and silver, but platinum, palladium, if you want to be a bit risky with a 5-year perspective, but particularly copper and uranium.
Yeah, yeah, and I just want to reiterate to the viewers that this is Fadi's opinion, it's not financial advice. And what about the precious metals like gold and silver miners? Have you got an opinion on that?
If you look at the gold miners, they're very, very interesting. They have been recently underperforming relative to the physical metal, but I think that's now beginning to change. The miners, if you look back in the period of 2001, the last bull run in gold was 2000, 2011. A lot of the miners were terrible capital allocators. They burnt a lot of their shareholder equity in a lot of marginal projects. So a lot of investors became skeptical of the miners. I think you'll realize now the management have become much more disciplined, much better capital allocators, much more careful, and you're beginning to see that in their margins. And some of their margins of the miners are even better than, and for example, some of the Magnificent Seven, such as Nvidia. But the markets investors haven't yet come on board, but they have started to come on board. Also, what's interesting is that the amount of gold being produced now is much less than what was produced 10 or 15 years ago. It appears we've reached peak gold supply sometime in 2018, 2019. And since then, you'll find that the global supply, global production of gold has come down. If you look at some of the biggest miners, such as Newmont, it was producing, I think, roughly 10 million ounces 10, 15 years ago. Now it's producing 3.5 million. Any miner producing more than 1 million ounces a year is considered a major player in the industry. Also, the grades, so the quality of the mines have deteriorated since the older mines of 10, 15 years ago. All of that is in favor of gold over time.
Yeah, and I wanted to touch upon a ratio that you've looked, and I look at this ratio, but more as the Dow Gold ratio. It doesn't really matter. You look at more as gold S&P ratio, and you talked in your article there about gold, which you can find on the Substack page, Fadi's Substack page, and you talk about how this ratio, which is how many S&Ps, I guess, you can buy with 1 ounce of gold, that it's telling us something much bigger. It's not just like numbers and charts. So could you go through this before we wrap up?
Very quickly, the gold, if we look at gold, gold is a proxy for economic, financial, and political upheaval that one could foresee. And the S&P 500 is a proxy of the US economy. And whenever that ratio reaches a bottom, such as, for example, in the late 1920s or the late 1960s or the late 1990s on 2000, every time this has happened, something dramatic unfolded economically, financially, and in some cases politically. So in 1929, you had the Great Depression and its aftermath, including the onset of World War II. Late 1960s, which was in the midst of the Vietnam War, the money printing that the US was engaging in to finance the war. We saw that 1971, President Nixon pulled the US dollar out of the gold standard and embraced a purely fiat currency. Then we saw during the 1970s a major stagflationary period. And then in 2000, we saw For example, China's admission into the World Trade Organization, its massive appetite for commodities and precious metals, and then 2007, the subprime mortgage crisis and the Great Recession that ensued. So every time this ratio comes bottoms, it's telling us that a major event, catastrophe, if you like, is going to unfold. And my hunch is, to me, I interpret that as a great stagnation. We're coming to a great stagnation, which explains why the economy, why the US economy, the European economies have been declining gradually towards the zero mark, somewhere around the zero mark. We've not seen any major recession in the United Kingdom, for instance, or any of the European countries, but pretty much they've been flatlined around zero or close to zero. And I suspect the United States now is slowly is going to reach that level. Some may call it a soft landing. I would call it a soft landing with a line, a long horizontal line close to the zero mark.
So, do you think it's possible that we could go back to these levels here, like 6 or even 5?
I think it's possible. Um, we have to always note that gold, gold, if you price it to dollars, it's not just the gold price going up, it's the fact that the dollar value is coming down. And if one agrees that the United States, the only way for the United States to control its debt is via moderately high inflation and some subtle form of financial repression, it's basically setting interest rates below inflation and transferring the losses really onto the banking system, onto the pension funds, onto the savers, is the only way, then there is no reason why gold cannot reach 5, 6, 7, or 8,000, or perhaps even higher. People are now increasingly trusting gold as an alternative to the US dollar, not just because of the state of the trajectory of the US economy, the exploding public debt, but also the way that the United States has weaponized the dollar against Russia, entity countries, Russia, Venezuela, and other countries, individuals, companies, entities that it considers are not are acting against U.S. strategic interests. In addition, something very important is that in the big, beautiful tax bill that is currently now going through the Congress, and which is being pushed by President Trump, there's Section 899, which will impose a 5% tax initially and increase it in increments of 5% every year until it reaches 20% on any foreign investor coming from a country that the United States deems is imposing unfair taxes on US individuals and companies. So we're seeing that the United States now is beginning to tax, its foreigners investing its capital markets. So I think that's also undermines confidence in the US dollar, which will further boost demand for gold and silver, but more broadly, if I had to hazard other commodities, but primarily gold and silver.
Yeah, so it looks like they're gonna use gold as an escape valve because a higher gold price, lower dollar means that they're basically defaulting on the debt without really defaulting. It makes it easier to carry the debt. Yeah, so even though we don't see eye to eye with everything on that, we agree. And Fadi, so it was great having our first interview here. I'm sure we'll have many others. And so before we finish, just tell the viewers where they can find your work.
You can find all my work on thothtalk.com, which is THOTH, talk, one word, at .com. I've started this Substack quite recently. I'm hoping to put out some material that you will not find elsewhere, that challenges the consensus and provides really the tool and challenges the views of the so-called experts, uh, and provide the tools to enable the average person, really the average reader, to understand and anticipate what's happening in macroeconomy, geopolitics, and in global economy.
Very good, Fadi. Thank you for coming on, and I really enjoyed our talk. And have a great day.
Thank you. You too. Thank you.